So let's get back to some more earnings movers. SoFi is one of the companies that reported this morning, and the company topping earnings expectations for the fourth quarter. Revenue was up 58% year over year. Total members up 51%. That was an addition of almost 480,000 in the quarter. The shares are surging by 12%, not just because of all of that, but also because its full year forecast for EBITDA came in ahead of estimates here. So all of that boosting those shares.
Yeah, not GE, excuse me, SoFi. In some of the quarterly new member ads that they had, 4,800,000 there. Total members were up 51%, products up 53% as well. And now here, the company going forward, I think in this environment for the number of consumers that they're going to be looking to add on to their services, this is kind of a big year that people were just looking across any policy that may come about where they had to refinance student loans. And SoFi was a core kind of element of that conversation. Just a larger question of going forward from here, how much of that refinancing still may be part of the SoFi story, at least on a year-over-year comparable basis, too.
Right, and this wasn't a perfect quarter, but to Julie's point, the stock is moving, I think, off that very upbeat, optimistic full-year outlook for adjusted operating profits. At the high end, SoFi's modeling for it to almost double year-over-year, despite economic volatility. But in the quarter, they had lower student loan volume and lower home loan originations. So I'm very interested to ask Anthony Noto, CEO of SoFi, more about that when we talk to him in the next hour. Also, personal loan originations up 50% year over year. It's unclear to me if that is a sign of consumer stress, where you just need more money, the inflation's taking bites out of your paycheck, and you need these personal loans. But I'm going to put all those questions to him.
Well, it's also about what kinds of loans, right, and which are the loans that are tend to be more profitable for them. In the statement, he did say there was a growth in high-quality deposits, so that means a lower cost of funding for their loans. So, you have to separate out the two things, right? There's the health of the consumer, and then there's what's good for SoFi. And, yes, you have a lot of overlap in that Venn diagram, but sometimes it matters what the loan mix is for a company like this.
Absolutely.